Good morning, I'm Gary DeWaal, and this is Bridge of the Weeks for July 23rd to August 3rd, and today is August 6th, 2018. For a second time this year, a Commodity Futures Trading Commission registered Futures Commission merchant and National Futures Association member was sanctioned by both regulators for not supervising post-trade allocations of trades by a third party where the third party purportedly favored proprietary accounts over customer accounts. Separately, the Securities and Exchange Commission denied the application of the BATS BZX exchange to list and trade shares of the Winklevoss Bitcoin Trust, saying the exchange did not propose measures to adequately prevent fraudulent and manipulative acts and practices in the underlying Bitcoin market. I just returned from the Lake County area at the north of Napa Valley in California, which is currently experiencing horrific fires and destruction, as are many other areas of California, the United States, and many other countries worldwide. It was a very overwhelming experience. So I can begin to reacclimate myself to the tasks at hand without losing sight of these extraordinary and very sad events. Let's get started. R.J. O'Brien & Associates, LLC, a Commodity Futures Trading Commission registered FCM, agreed to pay $750,000 US in fines combined to the CFTC and the National Futures Association related to allegations that it did not adequately supervise the post-trade allocations of a trading manager and permitted the trading manager to trade for his wife's account even after he was banned from trading by NFA. RJO is also a member of NFA. The CFTC said that RJO's supervisory breach occurred from January 2013 through February 2014. As deduced from review of both the CFTC and NFA settlement orders, it appears that during the relevant time, RJO carried several accounts managed and controlled by Jonathan Hansen and his firm, Newport Private Capital, which was registered with the CFTC as a commodity pool operator and commodity trading advisor. Apparently, Mr. Hansen often placed orders for customer accounts and proprietary accounts through RJO's electronic trading platform. Orders were frequently placed on a bunch basis and allocated later each day. According to the CFTC, Mr. Hansen disproportionately allocated profitable trades to proprietary accounts and unprofitable or less profitable trades to customer accounts. In September 2013, NFA issued a member and associate responsibility action against Mr. Hansen and his firm for reasons unrelated to their post-trade allocation practices. The MRA prohibited Hansen and any person acting on his behalf from remitting funds from any trading account he controlled without NFA's authorization, and later suspended Mr. Hansen totally from all trading. Shortly after NFA's MRA went into effect, RJO permitted an account to be opened for Mr. Hansen's spouse, although the Commission acknowledged that, quote, RJO was not aware of the relationship, end of quote, between Mr. Hansen and this account. Mr. Hansen entered orders for this account, but did not have written power of attorney. According to the CFTC, during the relevant period, RJO did not follow its own procedures in effectuating allocation instructions on behalf of Mr. Hansen and ignored various red flags that should have suggested wrongful post-trade allocations were possibly occurring. Moreover, after the issuance of NFA's MRA, RJO allegedly permitted transfers of funds from Mr. Hansen's spouse's account without NFA's permission as required. Finally, even after his trading ban went into effect, Mr. Hansen apparently controlled trading in his wife's account through identification that had not been immediately deactivated by RJO. The CFTC and NFA said these matters constituted a failure to supervise by RJO. In May 2018, Exchange Financial Access LLC, formerly a CFTC-registered FCM and NFA member, agreed to pay two fines totaling $250,000 US to the regulators to settle charges that, from at least January 2013 through January 2014, it also failed to supervise the allocation of trades by Mr. Hansen and his firm. Was it really necessary or appropriate for both the CFTC and NFA to pile up and bring these duplicative legal actions, particularly where only the NFA has express requirements on FCMs in such instances? For my views, check out the written version of this vlog at www.bridgingtheweek.com. The Securities and Exchange Commission disapproved the proposed rule change by the BATS BZX exchange to permit its listing and trading of shares of the Winklevoss Bitcoin Trust. The SEC denied BZX's application, claiming that its proposed rule change was not consistent with requirements of applicable law, mainly, quote, to prevent fraudulent and manipulative acts and practices, end of quote, and, quote, to protect investors and the public interest, end of quote. As proposed, the investment objective of the trust was for its shares to track the price of Bitcoin traded on the Gemini Exchange, a digital asset exchange owned by Gemini Trust Company, LLC, the trust custodian that is also a trust company licensed by the New York Department of Financial Services. The trust would only hold Bitcoin as assets. Among other things, the SEC claimed that despite BZX's assertion to the contrary, Bitcoin and the Bitcoin markets are not, quote, uniquely resistant to manipulation, end of quote. As a result, said the SEC, BZX should have entered into a, quote, comprehensive surveillance sharing agreement with a regulated market of significant size related to Bitcoin, end of quote, as an alternative means to meet its requirement to prevent fraudulent and manipulative acts and practices. However, the SEC claimed BZX did not enter into any such agreement. Although BZX pointed to its surveillance sharing agreement with the Gemini Exchange, the SEC said that the Gemini Exchange was not a regulated market despite its supervision by the New York Department of Financial Services, and even if it was regulated, it was not a quote-unquote significant Bitcoin-related market. Finally, BZX argued that even if its agreement with the Gemini Exchange was not satisfactory, its traditional means of identifying and deterring fraud were satisfactory to meet its statutory obligation. The SEC rejected this argument, too. Commissioner Hester Pierce dissented from the Commissioner's determination. She claimed that BZX's proposed rule change, quote, satisfies the statutory standard, end of quote, and that the SEC's refusal to approve the rule, quote, sends a strong signal that innovation is unwelcome in our markets, a signal that may have effects far beyond the fate of Bitcoin exchange-traded products, end of quote. In rejecting BZX's application, the SEC noted, however, that, quote, its disapproval does not rest on an evaluation of whether Bitcoin or blockchain technology more generally has utility or value as an innovation or an investment, end of quote. Unconnectedly, the National Futures Association proposed to adopt an interpretive notice that would require FCMs, introducing brokers, commodity trading advisors, and commodity pool operators to affirmatively make certain disclosures to customers, counterparties, or investors that engage or may engage in activities related to spot virtual currencies or derivatives based on virtual currencies with or through them. Not only is there additional information on NFA's proposed new requirements at www.bridgingtheweek.com, and by the way, check it out, but also on Tuesday, August 7th at 12:30 p.m. Eastern Time, 11:30 a.m. Central Time, Katten Muchin Rosenman will be hosting a webinar regarding the NFA advisory and the SEC action on the Winklevoss Trust. Details of this event are also available at www.bridgingtheweek.com, and of course, check it out. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website. I'm Gary DeWaal. Have a great week, and until the next edition of Bridging the Week, ciao.